Thank you, Honorable Speaker. I rise to second the amendment, the motion as presented on the floor of the House by my colleague, Honorable Mutuse. And I want to draw the attention to the people of Kenya that Article 2033, it indicates clearly that the shareable revenue will be based on the recent approved national accounts by the National Assembly. So it's critically important that once this motion is passed and the report is adopted, the next line of sharing will be based on these audited accounts. With those few remarks, Honorable Speaker, I second.
Honorable members, I now propose the amendment that the motion be amended by deleting paragraph 30 under the general observations and recommendations on page 20 of the report and substituting it as moved by the Honorable Mutuse. Yes, Honorable Mbadi.
Yeah, thank you, Madam Speaker. Madam Speaker, I thought maybe I would take a minute just to make it simpler. I know my colleague, Honorable Mutuse, who is a renowned lawyer in this country, has done justice to this amendment, and Honorable Undo, who is also my diligent member of the committee. But allow me just to maybe explain to members in a few words what this amendment seeks to do. Madam Speaker, you know we are required by the Constitution to every year divide revenue between national and county governments, and that should be based on ordinary revenue collected, audited and approved. So the last audited and approved accounts are the ones that is used. So that is why we are passing this motion to make that revenue available. Now, what is it that was wrong in the report which we are trying to correct? Madam Speaker, and this is something that we engage our minds to, we realize that almost all the years we have been making this mistake. So the mistake is this, that under non-tax revenues, we have been double accounting for the same amount, that we have been including the same amount twice in our reports, and we were almost doing the same mistake. So what is this? I will explain. Loan, you know, sometimes state corporations take loans, and when they take loans from the government. The government gives state corporations loans. They pay back to the national government that loan together with interest. When that money is received, it's usually paid to an entity which is called Government Investment and Public Enterprises. If you like, you can call it GPE. Now, once that money is received by Government Investment and Public Enterprises, it is recorded as income or revenue. Then when that money is transferred in full to the exchequer, it is again recorded as income. So the same amount is recorded as income when it is received by this Government Investment and Public Enterprises, and when they transfer the money to the exchequer, it is again recorded. So what we are doing with this amendment, Madam Speaker, is very simple. We are removing this double entry so that we don't inflate government ordinary revenue. It is to the tune of 56 billion, so that we have the correct amount which is received by government to be used as the amount for sharing our revenue vertically between the national and the county government. So that is the essence of this amendment, Madam Speaker. I hope I have been a little clearer to the members. Thank you, and I support.
Honorable members, before we continue with the contributions, allow me to recognize seated in the public gallery, Bishop Alexander Muge Girls School from Kwanza constituency in Trans Nzoia County. The Honorable Member for Kwanza, Honorable Ferdinand Wanyonyi, I'll allow you to contribute to this debate as you welcome the school from your constituency.
Madam Speaker, asante sana. Thank you very much, Madam Speaker. I take this opportunity to welcome the school, which is in my constituency. And as you can see, those who have come, please welcome to the sitting. This is where we are. This is where we make rules. And I hope and pray that you will also admire. And one of you may be a member of parliament in the future. So I want to, on the behalf of the Speaker,